Okay, students, the last section of the last module of the course, business succession planning. So you started a business in your garage 20 years ago for $300 and a prayer, and now it's a $20 million business. You're getting old, you know you're not going to live forever, but the business is still a good money-making venture, and so you'd like to be able to pass that on to your kids. But there's a problem because now it's worth $20 million. And if you don't do something, then when the kids inherit that $20 million asset, they're going to have to pay millions of dollars in federal estate taxes. And if they don't have the cash to pay that, they may be forced to sell the business just to come up with the money to pay the taxes. And you don't want that to happen, because that business is the goose that lays the golden eggs, and you want it to continue to lay golden eggs for your kids. So what can you do to get the assets of your valuable business passed on to your kids without them having to lose the business to pay the huge federal estate taxes? Well, it's not nearly as bad as it used to be, because it used to be the maximum amount that you could pass on to your kids. I think when I graduated from law school in 1980, it was $192,000. And over the years, it's been increased to $600,000 and then to $1.2 million. And right now, it's $5.5 million, and a married couple can shelter $11 million worth of assets to pass on to their kids and pay no federal estate tax at all. So fortunately, most of us in the middle class, even the upper middle class, we no longer have any big problem with federal estate taxes. That could always change. Congress could reduce that sometime, but right now, unless you go over the $11 million mark as a married couple, you don't have a tax to pay. But what if your business is now worth $20 million? Wow. As soon as you go over that $11 million limit, the federal estate tax is brutal. Last time I looked, it started at 34% and it went up to 55%. So if you have a $20 million business and you're $9 million over the limit and you have a 50% tax to pay, your kids have to come up with $4.5 million from somewhere. And almost no business has that kind of cash. So where are they going to get that? How are you going to solve this problem, save the business for the kids? Well, sometimes you can buy a big life insurance policy, but you know, once you get old, the premiums on those huge life insurance policies get to be pretty expensive. So that's one way, and that may or may not work. That's one of the last lobbyists that are in Congress lobbying to decrease the federal estate tax exemption are the life insurance companies, because they used to sell a lot more life insurance back in the day when they could say, hey, you better have a big life insurance policy or your kids will lose the business when you die. But now you've got to go over that $11 million mark, so they don't sell as much life insurance as they used to. But assuming that life insurance is not a good option for you, what else can you do? Well, you ought to go see your accountant or your tax planning attorney, and you ought to look at this, because there are some things that you can do to reduce the amount of the federal estate tax liability when you die. And one of the things that your lawyer may say to you is that you should get into a program of annual gifting. And you say, well, what are you talking about? I said, well, you can gift to one person up to $14,000 per year per person, and you don't incur any federal estate tax or gift tax liability on that gift. It's a tax-free gift. So you ought to begin an annual gifting plan. And you look at the lawyer kind of incredulously and say, you know, I'm $9 million over the $11 million limit. A $14,000 annual gift isn't going to make a dent in that. Why are you even troubling me with telling me about that? And you say, now look, wait a minute. It's a $14,000 limit as an individual giving to an individual. You and your wife, are you married? Yeah. You and your wife can gift $28,000 per person per year. And, you know, how many kids have you got? Well, I got 3 kids. Okay, well, are they all married? Yeah, they're all married. Okay, so it's 3 times $28,000 for the 3 kids, and you can gift another $28,000 to the spouses. So that's 6 times $28,000. What is that? I'm not good at math. I should have worked this out before I think that's $184,000 that you could give away. Now, do they have any kids? Yeah, well, yeah, there's 6 grandkids. Okay, so that's another $184,000 that you could give away each year. So each year you could give away $368,000 tax-free to 28,000 to each of your kids, 28,000 to each of their spouses, and 28,000 to each of your 6 grandkids. And so you're reducing your taxable estate by $368,000 a year. And that begins over a number of years. That begins to make a good healthy dent in your $9,000 over or $9 million over the limit federal estate tax liability. You go, oh, okay, well, that sounds good. Now, and you say, but I don't have $368,000 in cash to give away to my kids every year. That's just not workable. Well, okay, let's incorporate your business if it's not already incorporated, and instead of giving them cash, we give them $368,000 worth of the stock in your company each year, and thereby they get an ownership interest in the business, and so the value of the business is going down before you die, and we reduce your estate tax liability that way. And so, Grandpa thinks about that for a while, and he says, hey, that sounds good, let's do that. But he thinks about it a little longer, and he says, now I'm not so sure I want to do that. I thought of something that worries me. I might be healthy. It's my business, and I love my kids, but by golly, I want to be in charge of that business, and I want to run it for the rest of my life, or at least until I'm too sick to do so. For as long as I want to be in charge of that business. And if I start giving away a huge chunk of the stock in my business every year, and I live for another 20 or 30 years, eventually my kids and my grandkids will own the majority interest in my corporation, and if they want to, they can boot me out. I don't want that. It's my business, and I want to be in control of the business till the day I die. And the lawyer says, well, look, we can fix that too. You can recapitalize your stock. Right now you only have one class of stock. It's common stock. But we could reclassify or recapitalize your stock, and you could have common stock, which has voting rights, and preferred stock, which has no voting rights. And then when we make gifts of stock to the kids, guess which kind of stock we give them? We give them the preferred stock, which has no voting rights, and so you can transfer away a percentage of the value of the corporation. Every year you can gift that to them, but you retain all of the voting rights, and so you're still in control of your company. Grandpa says, oh, I like that, let's do that. So that's one way to reduce the value of your taxable estate and maybe get the company transferred to the kids without a horrible tax liability that forces them to sell the company. There are other things that you can do, and so you should consult with a tax planning attorney or an accountant and set up the things that work best for you. Another one to mention in passing is the family limited partnership. This has been popular with people down in the Central Valley that own acres and acres of that multi-million-dollar land, and they've been using it for farming or orchards, but the land values have become so high that they have a problem now with passing the family farm on and not losing it to pay the taxes. Well, one of the things a lot of them have done is set up a family limited partnership, and so instead of transferring shares of stock in the farm business to the kids and grandkids, they transfer every year limited partnership interests that have a value equal to the annual gifting amount, and they reduce the value of the farm business by that much every year. But because it is a family limited partnership, when dad and mom do die and the kids inherit the rest of the farm operation, because it is owned in the form of a limited partnership, the IRS gives them an additional discount in the valuation of the remainder of the taxable business because of the true idea that a business that is owned by multiple owners is more difficult to sell and negotiate a sale. So actually the IRS will give you an additional substantial discount in the taxable value of the business because it's owned by a family limited partnership. And of course, with regard to wills and trusts, someone should explain to you, you should sit down and have a lawyer explain to you the difference between a will, wherein all of your assets have to go through probate, an expensive and lengthy complex court process before they get out of your name and transferred over to your heirs while taking care of your last debts and taxes, or you avoid that expensive and time-delaying probate process by transferring your assets into a revocable living trust while you are still alive. And if your estate, I was going to say if your estate is large enough, you may get an additional tax benefit out of setting up the trust, but I don't think that's really true anymore because of the changes they've made in the status of marital federal estate tax exemption amounts. But at any rate, you could avoid thousands of dollars in probate costs if you set up a revocable living trust, and you ought to talk to somebody about doing that. So now you have completed the course. Congratulations. In the textbook, there's a final assignment, and that is, wow, you sold your business for $20 million. And you had about a $10 million profit on that. You've got $10 million in cash and you're ready to retire or go and do basically whatever it is that you always dreamed of doing in life. You now have the money to go anywhere, see anything, do almost anything, buy almost anything you want to buy, build or create almost anything you want to build or create. What is it that you intend to do? Dream a little bit. Visualize the dream right now. If you can see it clearly in your mind, then you can probably make it happen in the real world. And I hope you do. Best wishes to you in all your future endeavors.